Big Bitcoin holders are collectively Buddhist, but Ethereum is secretly making efforts. Where will the next explosion point be? Ethereum ETF attracts $5 billion. ETH surge 160%. Why are big investors selling so quickly? 3 million. The Shanghai Season Index rises to 60. Changpeng Zhao warns. FOMO sentiment is on the way. The green light for tax cuts, but regulators are strict. Who does the Korean crypto market listen to? Technology is advancing fast, but decision-making is lagging behind. Are global central bank digital currencies caught in a trilemma?
July 24th, Thursday, BitcoinTV Chinese channel. Where is the coin chain? I am Mark. Let's start with the 24-hour data headlines of the coin circle. Bitcoin has recently 12. The high level of $10,000 is lying flat, but the data on the chain is secretly telling jokes. IFP, the indicator, the fund flow detector, is actually pretending to be asleep. 2017 and 2021. At the end of the bull market in 2009, this stock was more active than the square dancing aunties, jumping up and down at every turn. Now, the price has reached a new high. IFP. It is falling instead of rising, which suggests that the big players on the chain are actually quite stable. They did not run away or dump the market, but locked their positions to wait and see. At the beginning of this year, this indicator did rise briefly, as if they were testing the waters to reduce their holdings, but the market was not scared and the price remained stable. This shows that there are fewer and fewer bitcoins in the exchange, and those who want to sell cannot sell them, and those who want to buy can just push the price up. But don't be too happy too soon. IFP. If the indicator suddenly goes up one day, it will be a signal that big funds are ready to run away. Therefore, the current market is like walking on a tightrope. It looks stable, but there is no safety net underneath. It is recommended that all the old friends in the cryptocurrency circle cherish it while speculating. After all, no matter how delicious the pie is, you have to be careful that it suddenly becomes a pie in the sky, right? Bitcoin is about to break through the ceiling of $118,700, but miners are living peacefully and have only 1.809 million coins in reserve, a new low since 2022. This wave of collective lying flat actually released three key signals. First, the Buddha's way of going online. Miners are not dumping the market. Although Bitcoin has soared from 60,000 to nearly 120,000, miners' wallets have not moved at all, and there is no 2021, the kind of clearing warehouses, dumping stocks, and running away drama. Second, the magical divergence. The more it rises, the more it shrinks. Prices are soaring, but miners' reserves are getting lower and lower. This unconventional trend has strengthened the logic of the bull market. Supply is insufficient to meet demand, and the price rises even more fiercely. Third, 182,000 is the warning line. As long as one day you see the miners' reserves soaring back 182. If the number exceeds 10,000, it may be a sign that big players are preparing to run away. ETF institutional funds can enjoy themselves, and miners will not make trouble but become a great help, as long as the price holds 11.6. However, you should keep an eye on the key figure of 1.82 million. If the miners collectively return to work, the market may have to perform a high-altitude dive. Recently, the sudden rise of Ethereum has indeed made many people a little panicked. Is it rising too fast and will it fall back? However, judging from the structure and data, it is not overheated at all, but just starting. 7 Moon 23. On the day, Binance and Bybit ETH. The perpetual contract funding rate remains at plus 0.010%, 8 hours, with an annualized rate of only about 4 to 5%, and there is no leverage explosion or sentiment bubble. The chain is also very stable. ETH exchange reserves dropped to 183,196,000, a new low for the year. It is obvious that large funds are waiting to lock up their positions instead of rushing to cash out. Don't forget ETH. However, once the underlying pillars of DeFi, NFT, L2, RWA and other tracks stabilize their rhythm, the altcoin market will often be ignited. Now that small coins have begun to sneak out, Ethereum has stabilized this wave, which may be the fuse for the next round of big market. Even if there is a short-term correction, it is more like a squat warm-up, and the next wave is the highlight. Please like and follow us to sort out the latest developments in the currency, blockchain and mining circles within 24 hours. Click the small bell to join the channel and become a member. You can get the Member Wealth password from Monday to Friday. This wave of crypto market rebound is really big, especially the mainstream public chains have exploded in turn. Ethereum has directly returned to the throne, driven by the dual engines of ETF and institutional buying, Solana, Sui, Hyperliquid. These all took off, but when the limelight was at its peak, On-Chain Lens uncovered a terrifying operation. A large investor who participated in the Ethereum ICO in the early stage, 800 pieces that have not been touched for years. ETH, nearly $3 million, was suddenly transferred to the Kraken exchange. This move instantly alerted the market. Could it be that he felt that the short-term high was coming and was ready to take the profit?
Although Ethereum 3,800 the dollar encountered resistance near SOSO value data shows that US spot Ethereum ETF continued to attract money, with net inflow exceeding $1 billion, coupled with the increase in ETH holdings by several listed companies, constitutes a strong buying trend. ETH in the past 3 months, the increase has exceeded 160%, but the market is still optimistic about the follow-up space. Bitwise Chief Investment Officer Matt Hogan said that the current demand for ETH has exceeded the supply, and institutional purchasing demand in the next year may be as high as $20 billion, which is 7 times the newly issued supply.
I think that Ethereum is the only blockchain that is able to be a substrate for the decentralized global economy due to the robustness. It's the only one with multiple clients and the ability to actually handle global throughput.
From a technical perspective, Ethereum has already surged too much, with the daily RSI soaring to 85, firmly standing in the overbought zone. Analysts are also reminding, if ETH can't hold up and falls below the moving average, it is likely to fall back to $3,470 first, and then it will have to look at $3,200 if it is weaker. But if the bulls continue to exert their strength, let alone, it looks like it has the momentum to hit $4,100. Speaking of which, ETH has indeed been treated as a marginal person in the past 2 years. Solana has FTX $7 in the ruins $280 the US dollar, while ETH has been unknown. But now it is different. ETF funds are entering the market, and treasury-level buying is also keeping up, and the demand for ETH is really rising. However, don't be too arrogant in the short term. If you rush too fast, you will inevitably have to take a breath, and you still have to be careful about the risk of a pullback. Bitcoin has soared to $123,000 in one breath. Seeing that the mainstream has already reached the sky, those forgotten low-priced coins are also gearing up to break out of the copycat area. Old investors are thinking, is the copycat season coming again? Is there a chance to reappear the bull market dream of buying everything with your eyes closed will go up? But just when everyone was ready to have fun, Robert Kiyosaki, the author of Rich Dad, Poor Dad, came to disrupt the situation again. While he was breaking the Bitcoin 12, one shouted, "Long live the market," while warning that Bitcoin, gold and silver are all about to peak and the bubble is about to burst. However, he also left a message that the decline will be a good opportunity to pick up bargains. This wave of first praise and then scare the operation has confused many investors. Should they rush in now or wait for it to collapse?
Binance founder Zhao Changpeng recently posted on X that CoinMarketCap's altcoin seasonality index is rising and FOMO may be coming. This index measures the previous 100 if 75% of the altcoins outperform Bitcoin, It will enter the altcoin season. At present, the altcoin seasonal index has increased from 10.1% at the beginning of the month to 1.2% at 1.3%. 27 rise to 53 to 60. Market funds may be flowing from Bitcoin to altcoins.
The altcoin seasonal index, to put it bluntly, is to warm up the market and see whether the market is hot or cold, but its biggest problem is that it reacts very slowly. When the market suddenly rises, it belatedly says, "It's the altcoin season now." Brother, it has already risen for a long time. Also, don't expect it to cover the entire cryptocurrency circle. It doesn't care about stablecoins at all, nor does it look at those packaged tokens. It only focuses on those coins that can really rise and fall. And how is it calculated? Whoever has a larger market value has the right to speak. The larger the market value, the more weight it has. As a result, once a few big coins move, the entire index will be distorted. So friends who trade in cryptocurrencies, don't just stare at an ASI index and rush in. You have to look at other things. For example, is Bitcoin still the dominant force? Is the total market transaction volume rising? Is the on-chain transfer active? And the fear and greed index, which is the emotional barometer of the cryptocurrency circle. Look at these together so that you won't go all in when you are excited, so as not to miss the market and be harvested first.
If the 2026 Korean One Stablecoin national team can really be implemented, why do regulators have to pour cold water on it first? From the US halt to the UK swing, is there still hope for global central bank digital currencies?
South Korea has recently been somewhat relieved in terms of crypto regulation. At the beginning of the month, the Ministry of Small and Medium Enterprises of South Korea said that crypto companies should no longer be blocked, and tax exemptions and financial support should also be given. What was the result? Several major banks in South Korea immediately applied for a bunch of stablecoin trademarks, and their stock prices also rose. It can be seen that institutions are becoming more and more interested in digital assets. In June, it was publicly stated that banks would first test the waters of stablecoin issuance and then gradually expand it. There was even a rumor that 8 central banks in South Korea plan to jointly create a national stablecoin anchored to the Korean won by 2026, which was quite ambitious. However, as the market became increasingly hot, the South Korean government also became a little timid and recently began to tone down its statements, fearing that it would accidentally push the cryptocurrency circle to the sky and lose control of the situation.
A new administration has taken power, and they're not just crypto-friendly, they're going all in, rolling out one of the most ambitious pro-growth crypto agendas in the world. We're talking shelving Korea's CBDC program, legalizing spot ETFs, building a regulated stablecoin market from scratch, and, for the first time in 8 years, unlocking the gates for corporations to pour money into the crypto markets.
Recently, many Korean ETF, the proportion of companies involved in cryptocurrencies has risen rapidly, and some have exceeded 10%. Fearing the spread of risks, regulators have begun to intervene. According to the Korea Herald on July 23, 2025, the Financial Supervisory Service of South Korea verbally warned local asset management companies to reduce investment in crypto-related companies and reiterated that the emergency countermeasures for virtual currency, issued in 2017, is still valid, prohibiting financial institutions from directly investing in cryptocurrencies or using them as collateral.
The Korean crypto market is very interesting now. The government is stepping on the gas like crazy, cutting taxes and loosening the money supply. 8. The corporate funding gates have been opened, and the central bank is preparing to launch an official stable currency. However, when we look back, we find that the financial regulatory authorities are stepping on the brakes. 2017. The old almanacs of the past are even used to scare people. Isn't this a typical example of drawing a circle with the left hand and a square with the right hand? Bank stocks took off directly because of the concept of stable coins, ETF. The crypto stocks in the market also soared, but the regulators poured cold water on them, and the market immediately withered. The South Korean government now wants to be the leader in the crypto world, but is afraid of getting into trouble if it goes too far. The funniest thing is that they are going to set up a Korean won stablecoin national team in 2026, which is simply a lie in the crypto world. If it succeeds, it will be the hegemon of digital finance, but if it fails, it will be really cold. Now all the leaks in Asia have moved their stools and are waiting to watch this good show. The US Congress has recently put on a show of force for the Federal Reserve. The House of Representatives directly passed the Anti-CBDC Surveillance State Act, which clearly means want to develop a central bank digital currency. First, ask our congressmen if they agree. Now, the Federal Reserve is CBDC. The dream is shattered. Looking around the world, CBDC only 3 countries have succeeded: the Bahamas, Jamaica, and Nigeria. The progress bars of other countries are even slower than snails. 39 are slacking off in the pilot phase, 21 are still creating new folders, and 46 haven't even finished the PPT. The funniest is the UK, which was ambitious to create a digital pound at the beginning, but recently suddenly backed down and backed out.
So no decision has been made on whether we will build and launch a digital pound. What we're doing in this phase, which is called the design phase, it's exploring how a digital pound will be if we were to build and launch one. So working on the design at a high and medium level. And this runs until 25-26, at the end of which there will be an assessment and their decision will be made on what happens next.
Andrew Bailey, Governor of the Bank of England, said in Parliament that if commercial banks' payment innovations are mature enough, he would be hard to be persuaded to support the introduction of CBDC. This attitude is consistent with his 2023. Bailey believes that the UK already has open banking and fast payment systems, and the central bank may not need to do this extra thing. This move also adds uncertainty to the prospects of the digital pound.
These days, CBDC is not difficult in terms of technology, but in terms of decision-making. The Bank of England is now divided. On one side, the project leader Wim said, "Oh, we are still designing. Why are you in such a hurry?" Component placement. And on the other side, the President Bailey almost said, "Let's not do it. Let the banks play with it themselves." The global central banks are divided into 3 factions. Central and European countries are running fast. The United States has completely given up at this stage, and small countries like Jamaica have already put it into use directly. But the most troublesome thing is the impossible triangle problem: monetary policy, financial stability, and user privacy. You can only take care of 2 of these 3. No matter which one you choose, it is easy to step into a pit and get into trouble. Look at the stablecoin next door. It has broken through $180 billion. If the UK really says no, the EU may panic. And according to IMF data, 83% of central banks are now studying, and less than 7% have actually landed. This battle has just begun.
Tether boss Paulo Ardoino finally couldn't hold back today and revealed that he has invested in more than 120 companies. And this is just the beginning. He will continue to buy in the future. Netizen. USDT money printing machine has switched to venture capital? Pudgy penguins, Pengu, surpassed Bonk in market value and successfully became the king of Solana emoji coins. Dogecoin players fainted in the toilet. Why are fat penguins more valuable than us? Shocked. Famous technology investor Kathy Wood suddenly spent $182 million to buy mining machine stocks. Didn't she say she would only invest in high-tech? Netizen. Got it. I'll go buy a graphics card tomorrow. Bezos made another move. This time he acquired B, a company that makes $50 AI wearable devices. Netizens complained. Can this be given away on Prime Day? Can it help me cut a knife automatically when I wear it on my wrist? According to gossip, our meme minister Musk may return to politics and continue to advise Trump. Netizens suggest, use Doge to the moon as your campaign slogan. It's so appropriate.
Okay, the above is the main content of today's program. Our channel focuses on valuable news in the currency circle, chain circle, and mining circle. There are news information and in-depth special reports. If you think our channel is valuable, you are welcome to forward and follow it. You can also become our member and receive the member wealth code from Monday to Friday. Let us become rich together and add a zero to our assets in the bull market. See you tomorrow.